Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to dive into Twitter, see what people are sharing on social media. It's generally related to three different topics: finance, commodities, and or wealth building. So let's dive in there. Let's see what's going on, what people are talking about. I probably have a little bit of a hunch it's going to be a lot of gold and silver that's going to be going on. And yeah, we'll dive in there and check, see what's going on. If you want to follow me at Finance, and if you want to join our community, finding-value.com, where I dive deeper into individual companies, individual sectors, and we still have a discount coupon going on. LEAP, LEAP is the discount coupon code. If you're interested, check out the description link below. We have a 5 p.m. question and answer session coming up on Sunday if you're interested in going to the Zoom meeting. Coming on down, AMD, which is a technology stock, says AMD Advanced Micro Devices, a tough look on the daily. It does, and this is a bear flag pattern into a bearish engulfing, where we could see further downside pressure in technology stocks. I know a lot of people have asked me if the technology sector sells off, will that impact our commodity stocks? At this time, it hasn't impacted. This sell-off has not impacted the commodity stocks yet, but it's possible that if these were to sell off rapidly, that maybe people could get scared. But if it continues to sell off at maybe 1% or 2 a day, that might not be enough to get a sell everything type of event. Another thing to think about too is we have pretty high interest rates, and I don't know if there's a ton of margin being used in these stocks or not. I don't know that, but I know that interest rates are a lot higher than what it used to be, and perhaps there's not as much margin in the market. I haven't looked at the data to see how much margin is actually being used. I just know that interest rates are at a higher level, and that might dissuade people from using as much margin. Zero hedge, we may be hitting an air pocket, folks. This is the NASDAQ. And this is the Fed rate expectations for December of 2024. And there's a big gap between the two, and it looks like historically they were somewhat correlated and move together. But there's been a divergence from about January of 2024 where things diverged and the NASDAQ continued to head higher while the Fed rate expectations are actually going in the opposite direction. So maybe the NASDAQ could head a little bit lower here and close that gap of that correlation that has been in history. When you realize a generational fire sale of hard assets has passed and you bought man-made digital tokens instead. Sorry guys, I had to read that. I started laughing when I read this. Do you know how bad people are going to feel burned if they figure out that these man-made digital tokens are just an extension of the NASDAQ tech bubble and they were to all go down while hard assets really rip, like gold, silver, platinum, palladium, and all the commodities. Michael Burry, stock trader, tracking. He says government spending is skyrocketing. In quarter four of 2020, it was 517 billion. Quarter four of 2023, with those increased interest rates, 1.02 trillion. That's close to 500 billion worth of added recurring obligations in just 3 years. And there is your government interest payments rocketing higher, looking pretty bad. I think the government and Powell at some point are probably going to have to hold rates lower. And if they do that, we could see everything go up. Everything. NASDAQ could go up, the S&P 500, commodities, everything. So that is a possibility. We'll probably have very bad inflation, and we would also get monetary inflation as well from bank lending and homes being sold if interest rates do come down to mitigate this problem in their interest payments. Shanghai silver versus the COMEX silver, $28 in China, 25.60, which is now over $26 today. They are sucking the silver over to the east. Same with the gold. And that's what this difference or differential is supposed to do. It's supposed to suck the physical from the west over to the east. And they're doing a good job of it. We are not in control anymore in the United States. I think the Chinese and the East are starting to gain control of the pricing. Coming on down, boom, breaking. United States API crude oil stock change better than expected. It falls downward 2.3 million barrels. So that's good, and it does support a bullish move in oil. Athabasca Oil bought back a whopping 9.3 million shares in March alone, the highest monthly buyback since initiating the NCIB last year, bringing the year-to-date total to about 14.7 million shares, or 2.5% of outstanding shares. Freight futures, we had a pretty big move downward in dry bulk. Capesize down 10%, Panamax down 7%, while the tankers are flat. HFI, so this is our nat gas here. Beautiful, simply beautiful. So we are seeing a pretty large decline in natural gas production in the United States. We have very low prices. A lot of natural gas companies have pulled back on production, and we've gone from about 105 billion cubic feet per day down to about 100.5 billion cubic feet per day. And we're producing roughly what we did in 2023 at this time. Peter Schiff says, even those so-called experts who see the uptick in inflation coming are still wrong, as they blame it on an overheated economy. Inflation will heat up even as the economy cools down. It's stimulative monetary and fiscal policies that are to blame for higher inflation, in his opinion. And gold and silver are definitely feeling that out. So when the kids say we're so back, what they mean is that crypto prices are literally back. They're back to where everything started to completely fall apart last time. So we've got resistance, resistance, and we're back into that resistance. Are we going to get rejected and come back down, or are we going to punch through this resistance level? I don't know the answer, but we can monitor that during our daily updates. Meanwhile, here's what silver miners did today. So this is game on for silver junior miners breaking out of its downtrend. Big, big, big deal here. This could be a once in a lifetime opportunity. Why do I say once in a lifetime opportunity? Well, we're breaking downtrend here, number one. But number two, when you price the silver junior miners against basically anything else, it's probably one of the cheapest sectors and areas in the stock market, silver junior miners specifically. Natural gas, the commodity itself, is another one that's really, really cheap. So silver junior miners, as we see silver break its downtrend line, and these guys are probably going to follow suit, and we could see a really big move in silver, which could correlate to a very big move in the silver junior miners. So I think this is a good spot to be looking. And here again is Grady talking about SLV, silver itself. It's a silver ETF. The silver already has a breakout on the quarterly. Now it's going for a breakout on the weekly. The breakout in the making here, we've got a resistance line going across in the pink. We have another resistance line in the blue. And we're breaking through all of those resistance levels to the upside. And we're doing it with some pretty good force. I'm interested to see where silver ends up over this year, I would say. This year and next year. We could see a big move in silver. Gold's our leader. That's already broken out. It's moving. And silver breaking where we are here could initiate the big pattern that we've all been gawking at for years, which is that big cup and handle pattern that was created in late 1980. So it was created in the late 70s. 1980, it peaked. That was the beginning of the cup. The cup went all the way to 2011 was the other side of the cup. And then we've pulled on back and we're going to start to break the handle here. And this is a big, big, big deal. We could see a lot of upside here in silver. Gold could also have a lot of upside because if we are moving, gold and silver are moving upwards with interest rates as well. That occurred in the 1970s. That did not occur in the other bull market in the 2000s. So I'm interested to see if this relationship is similar to the 1970s and we get a monster run out of this thing where gold runs to some ridiculous level. I don't know what the level will be. And silver breaks that 50-year chart pattern that we've all been gawking at, and it goes to some ludicrous amount. We're talking multi-$100, maybe even 4-digit, depending on how scared people get in the system and how much FOMO there is. But again, I don't know if that will occur. We'll see, and we'll see how high it goes. This is the weekly chart in silver. There's the clear break that we are talking about there. You can see it breaking out of that resistance trend line. Here's Luke Roman. He says, if you didn't read this 2 weeks ago, or Jan's predecessor article to this one from August of 23, today might be an opportune day to do so given market action. Full links to both articles in the thread below. And this article is talking about China has taken over the gold price control from the West. And that's that price difference too. So basically the West can't really manipulate it because they're taking the physical metal. And I'm sure they're going to have to let the price go up when inventory levels get to certain levels, and they don't want to loan out or sell all of the gold or silver that they've got that are trying to manipulate the price. And I think this one has some good stuff underneath it too. China's taken over gold price control from the West. The West is losing control over the gold price. And that's why we're seeing a lot of this stuff really move to the upside. Coming down, Peter Schiff, he says, the reason gold is still rising despite fewer rate cuts anticipated is that inflation is picking up more than anticipated. That means that while nominal rates may fall less than expected, real rates will fall more. Real rates are more important. In fact, they'll be negative. So negative real rates is what drives gold and silver and a lot of these monetary metals to the upside. We've got Game of Trade series says gold has now confirmed a big breakout on the monthly time frame. At this rate, it's only a matter of time before $2,700 target gets hit. Yep, we are starting to break through that trend line there, that resistance trend line to the upside. He's using the potential peaks even, and we're clearing those. Looks good. Peter Schiff, today gold and oil are going up while stocks, bonds, and Bitcoin are going down. Investors need to get used to this combination as it's going to become a lot more common as the reality of higher interest rates for longer, resurgent inflation, and a weaker economy set in. That's that stagflation that we are talking about. And what's driving this movement here is yields going up, in my opinion, and inflation's driving yields. So he's exactly right. Inflation is the root cause of it. Gold and oil, gold's accounting for the inflation, oil's the transmitter of inflation into the consumer price index. And then stocks, bonds, and Bitcoin are growth stocks, they're speculative stuff. And higher interest rates on growth stocks have a lower net present value using a higher interest rate. And that's what's causing the lower net present value calculation on those. This is JC Paris says, this is probably a chart to keep handy this quarter. We've got crude oil that continues to work its way on up. And underneath that, which is highly correlated, is the inflation-protected treasuries versus nominal yielding treasuries. So TIPS are outperforming the nominal yielding treasuries as well. And it's being driven by crude oil. We've got Warren Pies here. He says, today's price action is another reminder that energy is one of the better diversifiers in the post-pandemic world. Only sector that has tended to move with yields. We're also starting to see precious metals do that as well. So precious metals and energy are the two sectors that I like and that move up with yields. And I chose those sectors specifically because of this. And what he has down here is he's basically showing the sensitivity of different sectors and how they're correlated to yields. The ones that go from left to right upwards like this is a correlation with yields going up. These are correlations with yields going down. And a lot of sectors are correlated differently than energy is what I'm going to say. Here is the big picture ratio chart. Has now back tested the 30-year blue bullish falling wedge after breakout and has also formed a 7-year pink bullish rising triangle. The chart shows that the PM bull is still in its infancy. So that's gold and silver mining companies versus gold. Look how low we are, guys. This is still a huge opportunity for a big upside move. And what he says here is, let me shrink this down real quick so you guys can see it too. There we go. So what he's saying is, ratio charts are about relative strength. They compare the performance of one stock relative to another, and they are useful additional tool for figuring out direction in a PM bull miners lead big picture. And we've got gold working its way on up. I think the central banks are buying physical gold, which is driving the physical gold price up. The miners are lagging behind because people are still stuck over in technology la la land. They'll eventually come, just be patient. And here's platinum versus gold. It says that's a 22-year perfect bullish falling wedge. Even before I called the commodities bear market low back in 2020, I said platinum will outperform gold and silver in the coming bull market, in his opinion. And that's also what I think could potentially occur, is platinum outperforming everything. He says it's a 22-year bullish falling wedge. We had a false breakout in 2020. I bought that breakout there. We have a double bottom going on too. When price for this ratio chart moves up, platinum outperforms gold. If gold is a 7x from here, imagine where platinum will be in the future. And that's where I'm going to end it, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys like. We do have a 5 p.m. question and answer session coming up on Sunday if you're a member. I will have a little bit of an introduction training thing, opinion session as we go. It deals with portfolio allocation, position sizing still, and then diving into company selection and what I look for. It's one of the most important things that I do. It's what gives me the extra juice in the returns versus other people that might be in ETFs. And I'll go through it. I'll go through different technical analysis setups, which ones look primed to go now, which ones are going to be earlier. And I think it's highly important to understand all of that stuff when you're an investor because you might make different decisions based off where things are located. So I'll go through that and then I'll obviously answer whatever questions you guys have shortly after that. So, all right, guys, what I've got for today. We'll catch you next time. This is Finding Value.